Ever wondered how the Indian stock market works? It's a fascinating world that holds immense potential for wealth generation, and yet it seems daunting for novices. The Indian stock market, much like stock markets across the globe, is a bustling economic hub where shares of publicly held are issued, purchased, and sold. Its operation can seem complex, but don't worry, as we're here to demystify this for you. First, let's take a step back and understand the basic concept of a stock market. At its core, it's a marketplace where buyers and sellers come together to trade stocks, which are essentially small pieces of ownership in a company. It's like an auction house where potential investors buy shares they believe will increase in value over time. The Indian stock market is home to a myriad of stocks, categorized broadly into equity-preferred shares, and different classes of shares like Class A, B, and so on. Each type has its unique features, pros and cons, which we will delve into in detail. Next, the Indian stock market is conducted across two major exchanges: the Bombay Stock Exchange, National Stock Exchange. These are platforms where the actual buying and selling of stocks happen. Understanding the role and function of these exchanges is critical to navigating the stock market successfully. Lastly, the regulatory bodies play a pivotal role. The Securities and Exchange Board of India, SEBI, is the watchdog that ensures transparency and fairness in the market. It regulates the market to protect investors against fraudulent practices, thereby maintaining the integrity of the Indian stock market. So, from understanding what the stock market is, to the types of stocks available, the major exchanges, and the regulatory bodies that keep everything in check, we'll cover it all. Hang on tight as we unravel the intricate web of the Indian stock market for beginners. The Indian stock market, a vital part of the country's economic landscape, holds a significant position in the global economic scenario. This dynamic landscape is not just a place where shares of publicly listed companies are bought and sold, but an intricate system that intricately weaves together diverse elements of the economy. It is a bustling hub, a place of high-paced activity and ceaseless energy. Each day, thousands of transactions take place, each one impacting the country's financial health. Brokers, investors, and speculators interact in a ballet of numbers, of ups and downs, of profits and losses. The market also reflects the moods of the nation and the world, reacting to political events, natural calamities, and business cycles. The major players in this complex world are the exchanges where the shares are transacted. The two most prominent ones are the Bombay Stock Exchange, fondly known as the BSE, and the National Stock Exchange, respectfully referred to as the NSE. These exchanges not only facilitate buying-selling, but also play an essential role in regulating the market, maintaining transparency, and ensuring fair play. Other significant players include the brokers, the market analysts, the shareholders themselves, and the regulatory bodies. All these entities work in harmony to ensure the smooth functioning of the Indian stock market. Each player has a role, a purpose in this intricate system, and the result is a dynamic, ever-changing landscape of finance and investment. The stock market, through its constant fluctuation and intense competition, has a profound influence on the economic health of the country. It is a barometer of the country's economic condition, reflecting the confidence of investors, both domestic and international, in the country's economic policies and growth potential. The major players here include prime exchanges like the Bombay Stock Exchange, known as the BSE, and the National Stock Exchange, or the NSE. In this vibrant market, you'll find two main types of stocks, common and preferred. These are the primary classifications of equity securities, and each comes with their own unique set of attributes and potential benefits. Let's delve into this exciting world of investment. Common stocks are perhaps the most prevalent type of stock that investors come across. As an investor, when you purchase common stocks, you're essentially buying of the company. This, in turn, gives you partial ownership in the company. Along with this ownership, common stockholders are typically entitled to voting rights. These voting rights allow investors to have a say in the company's corporate decisions, which could range from electing board members to approving potential mergers. On the other hand, preferred stocks come with their own set of benefits. Preferred stock investors receive dividends before common stockholders, and these dividends are usually fixed. This means regardless of how the company is doing, you'll receive your agreed dividend. However, the trade-off here is that preferred stockholders usually have limited or sometimes no voting rights. As a beginner, understanding these distinctions, chances are you'll likely start your journey with common stocks, but knowing your options can help you make more informed decisions along the way. These two types of stocks are the pillars of the investing world, and understanding them can help you on your path to financial success. As a beginner, you'll probably start your journey with common stocks. The BSE and NSE, the premier exchanges of the Indian stock market, are the platforms through which these stocks are traded. This is where the pulse of India's financial marketplace can be felt, where hundreds and thousands of investors engage in a strategic interplay of buying and selling. It's an arena ruled by numbers, trends, and sentiments. The Bombay Stock Exchange, or BSE, holds the distinction of being one of the oldest stock exchanges in the world. Established in 1875, it has been at the forefront of India's financial evolution, bearing witness to the nation's economic ups and downs. The National Stock Exchange, or NSE, on the other hand, is a relatively younger institution, yet it has made its mark with its advanced electronic trading system, which ensures seamless transactions. The system's efficiency and reliability have garnered praise and trust, making the NSE a preferred choice for many. It's a testament to how far technology has come in streamlining financial operations. These exchanges are more than just trading platforms. They are the lifeblood of India's vibrant economy. The BSE is one of the oldest stock exchanges in the world, while the NSE is lauded for its advanced electronic trading system. But how does one ensure fair play in such a vast and diverse market? This is a question that every investor, whether novice or seasoned, might ask themselves. To answer this, we look towards a pivotal institution, namely the Securities and Exchange Board of India, or as it is more commonly known, SEBI. This regulatory body, designed to operate independently of the government, is in place to make sure that every stakeholder's interests are protected. Since its inception, SEBI has been the torchbearer of transparency, ensuring that every transaction within the market is conducted in a fair and unbiased manner. It is the gatekeeper of market integrity, monitoring the activities of brokers, firms, and individuals alike. SEBI's rigorous guidelines and rules provide a safety net for investors, mitigating the risks involved in dealing with stocks and bonds. Its role is to maintain a balance between encouraging business growth and protecting the rights and interests of the investors. This institution ensures that manipulative practices are kept at bay and that investors are given complete information to make informed decisions. SEBI works to educate investors about their rights and responsibilities, keeping them abreast about the latest trends and helping them navigate the often daunting world of stock market investment. All these functions combine to make SEBI a vital entity within the financial ecosystem of India. In essence, SEBI is not just a regulator, but a custodian of the Indian financial market, a key player you need to be aware of when investing in the Indian stock market. Now, if you're ready to take the plunge and start trading, you'll need a Demo account. This account holds your shares in an electronic format, making trading a breeze. A trading account is also necessary for executing buy and sell orders. Choose a reliable brokerage firm for a smooth sailing experience. But how do you know what price to buy or sell at? The forces of supply and demand determine stock prices. Keeping up with market trends, economic factors, and company performance can help you anticipate potential price movements. Finally, remember that the Indian stock market, like any other, comes with its share of risks and rewards. While it can be a platform for substantial wealth creation, it's also susceptible to market volatility, economic conditions, and global events. Diversification and a long-term investment approach can help you navigate these risks. In summary, the Indian stock market is a dynamic ecosystem with its unique features. Understanding the types of stocks, the role of major exchanges, the importance of regulatory bodies, the need for a demat account, and the factors influencing stock prices can set you on the path to successful investing. And remember, while the potential for profit is significant, always keep in mind the inherent risks and strategize accordingly. Happy investing!